This podcast may contain general advice, but it does not take into account anyone's personal circumstances, needs, or objectives. The scenarios and stocks mentioned in this podcast are for illustrative purposes only and do not constitute a recommendation to buy, hold, or sell any financial products. Importantly, the opinions expressed in this podcast are the personal views of the speakers and are not necessarily representative of Betashares' views. Thanks for tuning in to Practice Makes Perfect with your host, Damon Riscalla.
This is Damon Riscalla here for the Practice Makes Perfect podcast. And today I'm joined by Sarah Abood, the FPA CEO. Sarah, how are you today?
I'm really good, thanks, Damon. How are you?
Very well, thank you. And thanks for joining us for our very first podcast.
No problems.
Very special guest. A few questions for you today. So we might just kick off, just as a bit of a recap, the FPA at the moment. How do you sort of see its roles and responsibilities at this point in time?
Okay, well, we're a professional association and we advocate on behalf of our members who are largely individual financial advisors and planners, and that is what drives us every day. Primarily, it is about advocacy and working with government, working with regulators, understanding what our members are looking to achieve and making the best possible case we can for change that we think is important in the profession. And we're also delivering a whole bunch of services to our members, education, events, connectivity, collaboration with peers and so on as well.
And look, I guess on that front, so submissions, how do you, from your perspective, how do you handle those? How do you decide who works on them? The prioritisation of topics that you make submissions about. Can you give us a bit of insight into that?
Yeah, I think a lot of people are curious to know what happens behind the scenes on that. And certainly it's surprising to me just how many there are. So in this first year, it's actually today is my first year anniversary in the role.
Congratulations.
Almost every day there's something that comes out. There'll be a government department or, so someone will issue a proposal that is relevant to our field and we'll choose to respond or not choose to respond. We generally do choose to respond in most cases, but many of them are smaller issues that don't really have a big day-to-day relevance to our members. The ones that are really important are the ones that we focus the most on. And I guess the quality of advice review is probably top of mind for many of our members. Professional standards is also a big one, and that's a big topic of conversation, was last year and it will be this year. So we engage with our members regularly. We've got a policy and regulations committee, which has a number of members on it, as well as board directors. And that committee looks at all of these submissions and decides, okay, is this something that we need to talk about? Is this something that we need to submit on? And if yes, we'll generally also post in FPA community and invite members to submit directly. Often we'll talk to trade press, we'll talk to a whole range of people to come up with a position that reflects, in our view, the needs and desires of our members, and will advance the profession. So it can be quite a complex process.
It is.
Can take quite a long time. And some of them we don't get a lot of time on. So, famously for the quality of advice review, in many cases things were launched and we only had sometimes 3 or 4 weeks to come up with a full response. So we do often need to act quickly as well.
All hands on deck for those types of responses. Yeah, I can imagine. You touched on it just before. It is your 12-month anniversary or just gone past, I think. So what a big 12 months to have had sort of the back end of COVID. Can you touch on maybe just briefly your background, what sort of attracted you to take on this challenge? And I guess some of the learnings that you've had over the last 12 months, anything that maybe you expected or didn't expect that sort of has popped up?
Yeah, for sure. I mean, I've worked in this industry and with this profession my whole career, and probably the most recent role that was relevant, I was CEO of a self-licensed firm for many years, and we were members of the FPA. We were a professional practice, so I got to know the organisation well and really identify with the goals and the purposes of the association. I think the timing for me is also really interesting because I'm feeling that there is a real opportunity now to make changes that the profession needs that maybe hasn't been there before. So what excites me about the role is the opportunity to make all of these changes and also to make them relevant for individual advisors and planners. Because if you're reading legislation in theory, you can understand fully how it interacts with other laws and so on. But unless you've actually tried to run a practice and tried to implement that in the real world, I think that's what I bring to the role, is having had that background and that experience of running a compliant practice, running it in a way that's in the members' best interests, but also earns its cost of capital and can pay the staff and, meet payroll every month. So trying to balance and juggle that, I think, is something that the board were really keen to have that orientation. So I think I found that helpful, and I think many members appreciate that. I think probably what surprised me in the first year is just the sheer complexity and volume of issues that have hit this profession over such a short space of time. When the Better Advice Act came out, since 2019, the pace of change in particular has really, really ramped up. And the amount of change that you have to grapple with if you're running a financial planning practice is absolutely unprecedented. So I think it was good in some ways that last year was somewhat of a pause while we're looking at the regulations and looking to make change, that there was less new change that hit practices in that year. There were still changes that people had to make, but they'd been prefigured. They were things that we were aware of.
Sure.
So I think now we've got that opportunity to take a long, hard look at where we're at and make some sensible changes that are going to make it easier to run a compliant practice in the interests of your clients.
So in terms of those changes, if you had a magic wand and you could make any change that you wanted, what? Just give us, I guess, your top three. What sit right at the top of the list for Sarah, and what changes would you make?
Yeah, number one is getting rid of that red tape. There is so much now. Regulations have layered up and layered up. Some of them conflict with each other. Some of them duplicate things that are already law elsewhere and so on, and just trying to work out, okay, what do I have to do today? Getting the dates right on things like advice fee consents and fee disclosure statements and so on. That's enormously frustrating for advisors, because while I think advisors understand where it's come from, the way it's practically rolled out in real life is ridiculously out of proportion with what a client needs to see. And it's also become very confusing and overwhelming for clients. So there's no purpose being served by these duplications and these unnecessary layering up. So we've got to get rid of that. And I'm really excited about the Quality of Advice Review, because I think that is a real opportunity for us to actually achieve that and get rid of a hell of a lot of that red tape. So that's absolutely number one for me.
Yep.
Number two is digitisation and the power of technology. I think there are technologies out there that can help us a lot, and it's been hard to implement them because they're expensive to invest in, they're time-consuming to roll out, and many practices haven't had that bandwidth, that discretionary time to go and invest in a lot of these opportunities that exist. So I think that by freeing up some time, getting rid of the red tape, we potentially enable a lot more efficiencies that will better serve our clients. So I'm very excited about that. There are also changes that we need to make at a regulatory level, though, to realise the potential of those. Even simple things like planners being able to access the tax portal, Centrelink portals and so on. That they're not hard conceptually, but they would make a huge difference to planning practices. So tech, its potential and what it can do to help us be better for our clients, again, I'm really excited about, and I would love to see us focusing on that when we've gotten rid of that red tape. Mm-hmm. You asked for three, and number three for me will be the supply of advisors. We just don't have enough advisors to serve Australians. We've lost a lot. We've lost too many in the last 3 years. We're down, I think it's over 45% now. We're just starting to see the green shoots of hope. I think we're seeing more and more provisional advisors being registered, more people enrolling in courses that will enable them to be advisors, and that's fantastic. But we've got a lot of work to do. We're starting a long way behind the eight ball, and we need a lot more advisors in this country.
Yeah, it's really interesting. The advice businesses that I've spoken to, over the last 2 or 3 years, all of them have conceded that is a huge issue, trying to get the right people, people that are qualified and prepared to go through that qualification process. What can we do to make that a little bit easier and to encourage new entrants into the marketplace?
Look, I think we need to not be afraid to speak about just how great this profession is. I do worry sometimes that we do focus a lot on what needs to change and what's problematic, and that is read and seen by everyone, including people who might be considering it as a career. And I think we've got to balance that with why this profession is fantastic. Why did we go into this in the first place? What do we love about it? The fact that we're helping people achieve financial independence, financial well-being, and the incredible satisfaction that advisors get from that. I'd love to see us talking more about that and being more considered and more strategic about encouraging new entrants to consider this as a profession. And while we're working a lot with universities, we work a lot with students on the ground, I think we can do a lot more there. And I'm really excited about the potential to do that, particularly if we're successful in merging with the AFA. So that's a big strategy for us this year. And the goal there is to create a united voice, a united profession. And that also gives us the power, I think, to speak with a much louder voice to consumers and to potential new entrants, and to really kind of flesh out those career pathways for people to come into the profession, whether that's a new student, whether it's a career changer, whether it's maybe an advisor who might have left 4 or 5 years ago and thinking about coming back in. We really need to focus there and really grow our numbers as a profession to make sure we can do the job we're supposed to do and to help more Australians.
Sure, I can hear the passion. That's great. I love to hear it. I think the interesting thing too that I've noted is that over a very long period of time, if I think back to sort of 10 or 15 years ago, as a financial planner myself, life insurance was a huge part of the industry, and it seems to be playing a smaller role in the profession. People are finding it a lot more difficult to deal with, obviously because of some of the changes that have occurred. What's your view on that? Do you think there's some things that we can do to encourage more life insurance to be, sort of written and, to bring it back into vogue a little bit more?
Yeah, I mean, that area is critically important in anyone's financial plan. You need insurance. I don't think it's, possible to have a financial plan without it. And there's no doubt that the number of planners who specialise in this area has been particularly hard hit, particularly in the last 3 years. And there's a lot of reasons for that. I think the quality of advice review will be helpful in at least one way, in that as an outcome of that, we will have certainty, I think, on what the remuneration provisions are and what planners can expect in terms of being able to run their businesses. And that uncertainty around whether commission will continue and at what level, I think, has held back some people from moving into that area. So I'm really looking forward to that uncertainty being removed so we know where we stand. But because the cost of providing advice has also gone up, that's happened in life insurance as it has elsewhere. The impact of that has been partly that planners who remain in this area are serving, can't afford to serve a member of the public who's paying a premium of less than a given amount. And those amounts will differ across practices, but it's common to hear, things like premiums of $2,500, $3,000. Yes. Anything less than that, it's actually not economic for an advisor to work with those clients. And the challenge is for younger people in particular who need to get insurance while they're young and they're insurable and they don't have any exclusions and so on. Most planners are starting to work with people who are maybe older, maybe they have some health issues because that's where those premiums are. And the concern that is presenting, I think, for insurers and also for APRA is that over time the impact of that is the book tends to get older, it tends to shade less healthy, premiums start going up. And if we don't stop that, we're going to get ourselves into a reverse feedback loop so that insurance becomes essentially unaffordable for anyone who's not super wealthy. And that's not an outcome any of us want to see. So it really is important that insurance be respected and seen as a viable business, and it actually is economic to work in that area and to work with younger clients as well. So that's important to us. We've actually been working with the AFA with a joint life insurance task force for a number of years now. And with that task force, which involves members as well, we're doing things like advocating, dealing with APRA, talking to the insurers and doing what we can to try and support a healthy and viable insurance sector, which we think is critically important.
Great. Just to loop back, I think you touched on the quality of advice review a couple of times so far. One of the, and this might be a little bit contentious, but I'll ask your opinion anyway. Talking out there to a lot of advisors, there seems to be some thoughts that perhaps this could open the door to financial institutions reinstigating wealth arms or wealth divisions. Just wanted to get your views on that, whether you think that is the case and whether that would be good, bad or indifferent for us as an industry.
Yeah, look, there's no doubt, from our perspective, that's the issue that members are raising with us the most often. They're concerned that if institutions are providing advice at a lower level that's not of the same quality that you can get from a fully registered financial advisor, the concern is that the hard work that the profession's done over the last 3 years could be unwound. If there is another scandal, for example, will consumers be able to distinguish the type of advice that you get from a registered professional financial advisor or planner as opposed to an institution that's operating to a different standard? So there's no doubt that caution is being expressed there and members are concerned that that might be an outcome. I think on the other hand, members are recognising that large institutions have often played a really important role in generating the next generation of advisors, that there's typically been this process where someone will start out with a large institution in insurance organisation, a super fund, someone of that nature, get a good grounding, get a good understanding of the way the profession works, and then perhaps to the annoyance of the institution, that person might go and work for, a self-licensed practice or something of that nature. Yeah. So there is a recognition that if institutions aren't playing that role in generating the next generation of talent, that we might have a big gap there, and that's going to hurt the whole profession over time. So what we've focused on is how can we ensure that the quality and the standards of that advice is supported and upheld. And we made a number of submissions as part of that final paper to the Quality of Advice Review. One of the key ones we've suggested is that there be minimum legislated education standards for people who are offering advice in those institutions. Also that those people are supervised by a fully qualified financial advisor, and that perhaps what that could help us do is also create a pipeline for the profession. If these people are enrolled in a course of study, that will lead them to becoming a fully fledged financial advisor. And if the advice is of high quality, then that's potentially a good outcome.
Yeah, and look, I think that's a really great answer. I think that'll give a lot of comfort to advisors out there. And your points are well taken. I think, for a long period of time, those institutions did play an important role, and if it's done in a sensible fashion, perhaps there's no reason why that couldn't be done again. So I think that's a very solid answer. In terms of the proposed merger, FPA, AFA, keen to know the instigation points of that. Obviously, from both sides, they may be a little bit different, but from the FPA side of things, what do you guys see as being the big benefits that would bring to the table? How will it affect members on both sides? So that, and any potential disadvantages that you might also see?
Well, the key driver for the merger is advocacy for both of us. So when I started out in this role a year ago, for some reason it seems like a lot longer. I hope that's a good thing. We were dealing with government, dealing with regulators, and one of the frustrations they expressed was that to them our profession seemed very fragmented, that they would get one answer from the FPA, a different answer from someone else, and then a different answer from someone else again. And from that perspective, it was hard for them to understand what was the voice of the profession. By and large, what did the profession actually want? And true or false, I don't know, but there's a perception that as a result, decisions were made at government level rather than by the profession that perhaps haven't played out in quite the way they ought to have. So I was getting strong lobbying from members, from government and from regulators that we want to know what the profession thinks. We want to know who do we go to get that answer. And I remember being on stage with Phil not long after I started and having members stand up and say, "Why don't you guys merge?" Which was kind of awkward because we were talking about it behind the scenes, but it hadn't come to a point where we could talk about it. But the drivers were very strong. The other driver that can't be ignored is advisors are down 45%, and that means our membership's down. It means the AFA's membership's down. It means there are less resources available to deliver to members at the very time when we've got an opportunity to do so much more. So definitely making good use of those resources, removing duplication of expenditure and so on is definitely one of the drivers as well. But behind the scenes, the boards were unanimous, and they've remained unanimous, that there's a strong view that this is in the interests of the profession, this is in the interests of our members. We'll have more resources, we'll have a more singular voice to Canberra and to regulators and also to consumers to talk about what our profession does, why people need great advice and what we can do for them. So that impetus is very, very strong.
Great. And once again, it makes perfect sense having that stronger voice, out there to government in the marketplace. I think, is a great thing. In terms of, I guess, looking at some of the things that are happening overseas, do you as a body talk to other bodies, similar bodies offshore, and take learnings from them? Or even domestically onshore, do you have much contact with other professions and try and learn from what they're doing and implement some of that yourself?
Yes to both. So just the first question around our international connection. So we offer the CFP designation in Australia, which is the globally recognised designation, and we're part of a group called the Financial Planning Standards Board, which does that around the world. And we do engage regularly with financial planning associations in other countries. We're looking at global recognition of CPD. We're looking at how can planners be more globally mobile and so on. I haven't talked a lot about that yet because I want it to actually be fully implemented before we start talking about it. But I think, to me, it's a positive that we're part of a global community and our regulators are talking all the time. So there's a body called IOSCO where, ASIC is represented, as are the regulators of the other countries, and they regularly get together and talk about things that have global implications. And probably one of the biggest topics we're talking about right now is cryptocurrency, digital assets. How do we deal with these things because they are cross-border? That they're not regulated financial products in this country, although South Africa has just made that change. So they've just recently regulated these digital assets, Bitcoin and so on, as financial products. So the advantage of that is we're able to learn from what other organisations are doing, what's happening in the UK, what's happening in India and so on, and ideally pick the best from them. In terms of what we do locally on the ground, yes, absolutely. There are a number of associations. I think famously 13, that number keeps coming up as the number of associations that have some involvement in our profession. And we have a group called the Joint Associations Working Group, which includes organisations like FINSIA, CPA, IPA and so on. There's a number of us that work together on areas where our members' interests coincide. And we've found that to be very useful and is certainly appreciated by government and regulators where we're able to make a joint submission on something. We do that, and that really signals clearly to the government where we have a strong consensus. I think it's important that we keep doing that.
Yeah. So given your background as an advisor, now the role or, the roles that you've had in the industry have been quite varied. And I think that's a wonderful thing because it gives you a great perspective, an ability to look at things from all sides. So if I put to you at the moment the question of where you think the biggest opportunities are for advisors, not just in the forthcoming year, but perhaps even a longer time horizon, sort of the next 1 to 5 years, where do you see the really big opportunities for good advice businesses out there?
Look, I should preface it by saying I'm not a qualified advisor myself. I cannot offer personal financial advice. I have run a financial planning firm, though, as CEO. And you're right, I've worked in a range of different businesses on both sides of that equation. I've worked for BT, for Fidelity, for a range of different businesses. So I think it does help to have that broader perspective on how the industry works and how it comes together. And certainly from my time running a planning practice, I think certainly it's important to be engaged in the conversation and to support and advocate for things that will change the profession holistically. Secondly, in terms of what you can do within your own operation, I think finding efficiencies is probably really important. For many of our members, they're not that stretched to find new clients. That's not the case for brand new practices or practices that have got new planners coming in, of course. There's still plenty that are hungry for new clients. But by and large, many of the mature practices don't have trouble attracting new clients. The problem is how to get the cost to serve down. So a number of practices are working on digitisation and automation. So that whole area is challenging because it requires investment. It requires a lot of work to get those processes nutted out and digitised. But having done that, you then have a far more scalable business. And we're certainly looking at everything we can do to support businesses that are on that journey. Doesn't mean we're ignoring changing some of those annoying rules. We absolutely are. And that's important to change. But in terms of what's within your control right now as a practice, I think that probably offers a lot of scope and a lot of support for practices to serve more clients more cost effectively. A lot of our members are looking to grow inorganically as well. There's a lot of merger and acquisition activity out there. I think that will continue. I would just caution to say it's really important that you have a scalable model. It's a mistake to grow scale and just keep adding bits on to an existing model that has inefficiencies built in or is already expensive to run. So I think it's important to do both for a practice that's keen to expand. Many of them are looking at succession as well, and succession is so important to get right, and it can take a long time. So for planners who are thinking about what their next play is and thinking about, okay, maybe in 5 years' time, I'm taking a step back. I'm going to focus on running my business. I'm going to bring someone new and young and keen in. Don't delay. I've seen so many of those not work out for a range of reasons. So it's a 5-year proposition at minimum. So I think it's something that it's important to get onto quickly to make sure that the impact on clients and the business is positive over time. There are also a lot of businesses that are offshoring, and I hear different things from practices around whether that's a good idea or not. There's definitely relationships there that are working well and relationships where practices are really happy. There are others where the efficiencies in terms of the thing that's offshored are being eroded by the challenges of managing the offshore relationship. So I think it's definitely important to be talking to colleagues about what's working for them as well, and not underestimate the impact of trying to transform your practice. And it does take a while. It takes time and attention, and it takes investment. And I think for many planners, they're finding that challenging right now, particularly if you're in a smaller practice, because by the time you finish looking after your clients, turn the lights out, you've paid your staff, there's not a lot of discretionary time left to spend on improvement. But every minute that you're spending on that is going to pay dividends in the future. So I think that is really important. A lot of our members are focused in that area, and that's an area where we're looking to invest more as well as an association. There are also a lot of other organisations out there that can help members in improving their practices, and I'd love to see more focus in that area because I think it's within our control.
Sure.
Whereas advocacy and so on, we can try hard, but sometimes we don't get the result that we want.
Sure. On the topic of members, curious to know, when members call through, what are the biggest areas of assistance that they're looking for? Is there sort of a particular theme that you pick up on? Was there certain aspects over COVID which have sort of dropped off? But yeah, very keen to know what the most common reason for a member picking up the phone and talking to you guys is.
Honestly, right now it's advocacy. Members will pick up the phone to myself, to the membership line, and let us know in no uncertain terms what's getting up their nose, and that does make a difference. We act on those comments and suggestions that are made to us. Literally, the number one thing members were talking to me about last year was advice fee consent. That was just, I think, infuriating for a lot of members, because the requirements are so arcane and abstruse, and you can't be a day early, and every product provider has got different rules. It's crazy. So they've signalled to me very clearly that they want to see us working on that, and that's a high priority for us. Professional standards was another issue that many members felt very strongly about, and there wasn't, in my mind, a very strong consensus. There were a lot that felt that an experience pathway was fantastic. That was the only way to solve the problems, and they wanted us to advocate unequivocally for it. Another really big group of members that were very angry about that proposal, thought it was undermining the work that had been done on professional standards, and wanted us to not move a jot. So that was a difficult one, and we ended up with a position that's kind of somewhere in the middle, recognising that an experience pathway is likely to come in, but looking to put limits on it so that we still have a profession, we're still able to talk to consumers about why we are a profession, the fact that we're all qualified, the fact that we've all passed the exam, and so on. So there are many issues like that. Advocacy is generally the number one thing that members pick up the phone to us on. And then there are a whole range of things that come a long way second. Education and support in CPD is a big topic, but it's definitely much more important for members who are in self-licensed practices. We've got a lot of members in that position, but we also have members who are part of large groups. And in that case, they're not generally too worried about CPD because their licensee takes care of a lot of that for them. So there's a wide, disparate range of issues that members raise with us directly. But number one is advocacy issues.
Yeah. And look, in our conversation today, I think, that's been an incredibly impressive aspect, how hard you guys are advocating for the industry as a whole, and the constituents within the industry. So, from where I sit, I think that's a wonderful thing. We definitely need a strong voice in the industry with the amount of legislative changes that have gone on, over the last 5 to 10 years. Now we're almost out of time, so I'd like to ask you one last question. We're at the beginning of the year now. When we get to the end of the year, what would be the 3 biggest things that you would have liked to have achieved throughout the course of the year?
I would love to see some red tape reduction that's actually happened. Now, I don't know if that's feasible to expect because it requires legislation, but there are many proposals in the Quality of Advice Review that could be quick wins. Things like getting rid of fee disclosure statements, like standardising advice fee consent and so on. That could be relatively quick and easy, and I'm really, really hoping that we are in a position to see some outcomes there, because that's probably the number one stone in the shoe for most of our members. And I'm optimistic that we may get there. We're certainly pushing hard for that. I also want to see certainty on professional standards because right now there are many people who are kind of in limbo. They might have some more units to do under the FPA guidelines, but they're not sure if there's going to be an experience pathway, so they don't know which way to jump. And that's really frustrating for the universities as well, because they don't know what they need to be doing to support their students for the next year. So the quicker we get certainty on what's happening with professional standards, the happier I think we'll all be. I'd really love to see the merger progress. I think the case for the AFA and the FPA to come together is really, really strong. I'm very excited about that, and I think that would be a great positive move for our profession. And I want to see a more clear and articulated and overt message to students and new and career changes about why this is a great profession. I really want to see those numbers turn around this year. We're not going to get to the 100,000 that I'd love to see. People smile when I talk about 100,000. There's far more accountants than 100,000 in this country. There's more lawyers. We're a profession that has a lot of similarities with those professions. So I think we need to be into those 6 figures over time. We're not going to get there this year, but I'm really keen to see that turn around this year, and I'm really excited about the prospect that it will.
There's some very ambitious goals and 3 very big ticket items. I wish you all the very best in achieving those. I'm sure you will. It sounds like the plans are well underway. So once again, thank you for joining me today. You're our very first guest on our Practice Makes Perfect podcast. So thank you, Sarah Abood.
Thanks so much. It was great.